Good morning, traders. It is Tuesday, August 27th. Taking a look at the charts, we got the SP 500. This is the trend analysis from green bars to orange, which is a trend reversal. And now we are stuck in this negative bias in the market. The big question is, where is the market going to go next? And are we going to have some type of movement like this? This actually pattern that we've seen right here is very similar to yesterday's gap up and pattern up. We could see the market gap higher and drop down for potential double dip. We do have a pretty significant support level here, which price has it tagged 2 sessions ago. Since then, it's rebounded. We got the 20 and the 5-day moving average here, and more or less it's in the halfway point. So today we're seeing the equities start to gap up. They're going to gap up near this resistance area. We could see it push up to 29, a little bit higher into these moving averages. And if we were just draw a line across there, this kind of the reversal zone, this is an area where the market is set to gap up. It's 2,900, a whole number. There's lots of reasons for this gap higher to eventually roll over later in the morning and sell off, and we could see some big movement to the downside. Now, if the equities market can start to break out and get above these, we've got pretty key resistance zone across here that if it starts to get above these, we'll be off to the races for a fairly significant run, most likely to test new highs and to poke above there going forward. But if we start to break down below the support zone, things are going to get real ugly. We're going to see a big collapse. Now, if we look at the daily chart, you can see how we've been oscillating around here. We've been talking about this pretty much from this low and this reversal. We talked about how the market was most likely going to chop sideways for a few weeks, going to be huge volatility, and that has been unfolding, and we're just waiting for the breakout. The bias is still to the downside based on current momentum and technical levels. So we're going to be up near resistance this morning. This is the 5-day moving average, the 20-day. We're into these lows of these other bars over here. So a lot of volume traded here. And hopefully we'll see prices roll over, start to break down and sell off. Now, if we look to where money is flowing into both stocks and bonds this morning. Bonds are up 0.5%, having a nice move. Looks like some fearful money moving into bonds and continuing to hold. We are long bonds, we are short the equities, and we had our last signal here in bonds. We had this buy signal we got in, and we had a nice run. And what bonds are forming right now is a short-term bull flag. If we were to just give a Fibonacci extension a target of the upside, we can go from down here to this rally and down to this recent low. And this gives us the next possible target for bonds. We've gone from this buy signal, you've got your rally, you've got your consolidation. This is a beautiful bull flag settling in above more or less all these previous highs, so it's holding up really nicely. And the next level, if we hit 618, have some type of hiccup intraday or for a day, then usually we're going to hit that 100% measured move. And more or less this, you can't see it on the chart here. Let me just move it over. Whoops. If you take a look at this recent high over here, it pretty much matches with that 100% measured move. Typically, you get a run up, you get a pullback, and then the next target, instead of trying to push to nominal highs, you'd set your target probably just below that high, because there's going to be sellers up there saying, if it gets close to there, I want to get back out of bonds. So it'll create some selling pressure. So put a target just below there. That would be our first real kind of measured move. Nice pop in the market to the upside. From there, we could start to break out and see a much larger run going forward. If the equities market breaks to the downside, money is going to pile into bonds. Let's take a look over at the chart of gold. Gold moving up a little bit today, relatively flat actually. It's only up 0.1%. It's had a nice pop. It's been flagging out, and it's flirted with this red hashtag. It traded up above that the other day, which means it's overbought, and it's been pulling back and kind of flagging here, building a launch pad. We'll see if the equities market does bounce in a big way and break out. Gold and miners, we've talked about this, are going to pull back the hardest, much harder than bonds, which is one of the reasons why we got into bonds. It was the lowest risk-off asset class we could get into. Yes, metals have popped and moved higher percentage-wise, or the miners, but overall they carry about 3 times more risk than what bonds are going to have for the same setup. So we're going to work our way back into metals once we've got what I think will be a lower risk opportunity to get in. We really want to see where this equities market's going to pop, if it's going to pop or break down, and we'll see which setup we get into: gold, silver, or potential miner play. Overall, silver is actually having a big pop today. Silver is extending higher. You can see it on the daily chart over here, a big move up to this 18 area. So it's really extended. It's, if we look at this chart, it has moved all the way up to here. So it's really taking off without gold, which is pretty interesting that it's leading the way at this point. That's a very speculative move. A lot of people piling in there. And if we were to look at the bullish percent index for gold miners, we're getting close to that. 100% of gold stocks are trading with a bullish pattern. And usually when that happens and we see everybody piling into the highly risk plays, it usually means the metals markets are getting close to a pullback. So I am a little nervous about this pop. We'll see how it unfolds. Overall, I do like gold. I like the miners, and we'll be looking for the next low risk opportunity to get into the precious metals sector with our next risk off type trade. Looking over at natural gas starting to form this bottoming formation. You can see we've gone from a downtrend, which a negative bias, which are red bars, where you get into these overbought markets that pull back. It got overbought again, it's pulled back, and now the bias is changing from red to orange to green. Yesterday starting to break out to the upside and starting this pattern. If we look at the daily chart, you can see we've got into this more or less the momentum is slowly shifting, but we've had a nice pop in price. It's consolidating here, and it's holding up really well. We'll see if it could continue to chop around for a little bit, but it is at this point where seasonality is going to come into play. September is typically a very strong season for natural gas. We could start to see a run back up to this 235, 240 area, and then potentially back up to this 255 and beyond. This is a long-term major bottom that is trying to reach and form a base. If it does get traction, it's going to potentially get back up into the mid threes later this year. Looking over at crude up 1% this morning. Big gap down yesterday, huge volatility. It ran up, sold down. Today it's moving back up a bit. Overall, it does have a little bit of a picture like it's kind of a washout low type of price action the last 2 days, and it could start to rebound a little bit more here. But overall, the bias is still to the downside. The trend is down. It's really struggling. There's a lot of chaos, a lot of lines and moving averages through here where there's going to be a lot of sellers that sell at each of these levels. Create downward pressure, and we could very easily see crude continue to kind of work itself down and tag these significant lows. Now overall, the momentum here is pretty strong. We've actually gone from a downtrend, which are red bars, from an overbought market here. It's pulled back, and now the bias is shifting much like natural gas. It is starting to flatline. It's trying to find a base. So overall, we're looking for crude to set up some type of new pattern for us to get long or short. And right now it's in a neutral territory, and we'll see how it unfolds going forward. Last but not least, let's take a look over at Bitcoin. Bitcoin had this big move earlier that we called. We talked about this level, that once that 6,000 level broke, we're going to see probably $4,000 within a week or so, and that ended up unfolding, and it carved out a bottom. Since then, it's broke out of this base, it's rallied up, and now we've got another what looks to be kind of a exhaustion blow off top, and it's forming another consolidation. And the big question is, which way is this going to break? We talked about it when it was trading up through here and up in here, that it needs to build some type of new launch pad or some new base for it to either break out to the upside or to break down and collapse. And we're starting to get these kind of rising highs. You could argue it's somewhere more along here of a horizontal level, but overall it's kind of holding in this pattern. It's starting to get into the apex, and we'll see where it goes. There's a short-term level here that if it starts to close below there, it could start to break down in a big way, and we could see a pretty decent flush and pullback in Bitcoin. So it is getting into this coil pattern. It is building a pennant. Whichever way it breaks out of here, I think is going to be a very significant move. But the type of price action that we saw right here was, let me just grab a different tool. type of price action we saw here is very similar to what we saw when it hit 20,000 and everybody was piling in, chasing price, and now it's consolidating. It's building this kind of this pattern here, which to me feels a lot kind of like this pattern, and it could very easily break and completely crumble and send a lot of cryptos all the way back down, selling off even more. Bitcoin is about 65% of the entire Bitcoin or cryptocurrency market in terms of value. So it really is the tide, and it has recovered really nice while most other cryptos have just been flatline and declining. So the big bubble of everyone piling into all the little cryptos is more or less finished at this point, and it really just is this giant floating out here controlling most of the capital for cryptos. Anyways, that's it for this morning. I'll talk to you in a little bit. Bye-bye.